Yo, what's up, you guys? Welcome back to another weekly breakdown where we basically take a look at the market from both a technical and a fundamental perspective and see what the best, highest probability setup is for the new week. If you are new to the channel, I suggest you head over to the playlist and start with educational content so you can learn about what fundamental, how to read the COT report. All of the important information is there, and then you can come back and look at the market breakdowns, especially if you are a new trader in the market also. Now, without any further ado, let's start with some of the questions that we received, and then from there we jump straight into fundamental data. Now, first question from Mongani saying, what is the right time frame to see this? So you can look at the daily or the 4-hour. Spue is saying, may you please suggest a website that I can visit to get fundamental data? I only look at my Forex Factory, and I've explained how to look at it and read it in the educational section. And then I look at CNBC, where I basically read about the news. So if I wanted to read about the Federal Funds Reserve, if it comes to positive, I'll go over to CNBC and I'll read between the lines through there as well. So you can use the same one as you've probably seen with most of the breakdowns that I do. Liso Botswana saying 99% chances Aubrey Adams is in Western Cape, will be a colored guy, but the guy sounds black like me. I'm Koza and this is a black guy. So black South African, 100% agree with you, which is why I had to investigate a little bit further, because the sound of the voice didn't match the person's profile photo that I saw on Facebook. And on that topic, so I will be moving these scam exposing videos. I'm busy creating a new channel for these social media scams that I'll give you guys the link once it's available, and then I will be posting these type of videos once every week on that channel only, and this channel will be focused on what it was meant to do in the first place, so that there's no confusion between the two. Mr. Zolati saying, this must be crazy coincidence. I saw the same yesterday, but for matric certificate. I actually saw that one as well. Tried to go with that, but that lady didn't understand English, so yeah, that didn't go too well. Stoffar Tech is saying, we're looking overall bearish for the market indices. So although there's a negative correlation between the stock market and the dollar index at times, it's very important that you keep your eyes out for any companies that are releasing their earning reports as well, because remember, the Dow Jones, the NASDAQ, the S&P 500, these are all companies that are listed on these exchanges, and if they're doing good, then the market's gonna go then the market's going to do good as well, regardless of which way the dollar is going to go. So always make sure that you keep your ears and your eyes out for any earning reports that of these companies that are listed on the NASDAQ or on the S&P or the Dow Jones as well. And a simple Google search will give you a full calendar of which companies releasing their earnings report when. You can then look at how much they weigh on the stock market, and that will give you a good indication there as well. So we're going to move over and look at what news events we had came through last week. Firstly, huge surprise from the Federal Reserve. They hiked the interest rates by a quarter of a basis point, obviously giving the dollar index the boost that it needs to continue higher. And that is the overall sentiment and the outlook that we will be looking at when we do the technical analysis. Next up, going into the new week, Monday is nothing happening for the index, maybe lower news. We've also got the ISM PMI, we've got the job opening survey, we got ADP, non-farm employment change, we've got unemployment claims, we've got the ISM services PMI, and we've got the average hourly earnings, and we've got basically it's the NFP all over again. Very interesting to see the unemployment rate, because we have seen less people are filing for unemployment claims week over week. So it would be good to see unemployment come a little bit further down, and that will obviously give us a good outlook also. But that news will give us an indication of what we can expect going into the new week. Firstly, article from CNBC saying that the S&P 500 closes nearly 1% higher on softening inflation data. NAB's third week of gains. Live updates. It says here stock rose with Friday. Stock roses on Friday with the Dow Jones and the S&P 500 closing the highest week earning week. Third winning week in a row. A measure of inflation closely watched by the Federal Reserve at its lowest in nearly 2 years. Also, the Dow was up 0.50%, S&P up 0.99%, and the NASDAQ gained 1.9%. All three major averages notched weekly gains, with the 30 stock average up by about 0.66% on Thursday. Dow Jones ended a 13-day win streak, a length not seen since 1987. I was actually born in 1987. It's good to know. So we have some good reports, and it says here earnings season continued with Dow member. And this is exactly what I was making a reference to earlier when I was speaking. It's important to also look out for these earning reports. It's going to come through also. Next up, some news for gold. It says here gold heads for weekly loss on a strong U.S. economic data. It says here gold regained some ground on Friday as the dollar retreated, but still headed for its worst week in 5. After data pointed the resilient U.S. economy showed bets for dovish tilt in the dollar index monetary policy. Says here bullion headed for a 0.2% weekly drop, logging its biggest daily decline on Thursday after data showed faster than expected US GDP growth in the second quarter. Now, that obviously gives us a very good indication of which way we expect the dollar index to head this week. And again, due to the negative correlation in precious metals and all currencies that trades on the spot, that gives us a good indication of exactly what it is that we can expect. Now, looking at the dollar index from a technical perspective, the first thing that we can see is the market broke below this level of support, then broke above this level of resistance. The markets also broke below support and it's back to test it as resistance. Now, based off my own analysis, okay, I do expect the market to pull back slightly in the week and then obviously continue higher, and this is basically where I would say we can expect the market to head to before we could potentially see any pullbacks in the market there as well, because all of this resistance that got broken over here is now turned support, a slight pullback and a continuation. So obviously expected. Next up, we've got Euro USD. Now Euro USD, what we have over here, the market broke above this level of resistance and then came back, tested as support. Support did not hold. The market broke above this level, structural level of resistance here as well. Now you can see how the price action is basically the same as it is for the dollar, because why? That's Euro USD. Now, what do I expect to happen to here? I do expect Euro USD to pull back slightly and then continue lower as we continue for the rest of the week. This would also potentially give us a deeper retracement as we head towards the NFP. Next up, we've got the Dow Jones. The Dow Jones basically has been overbought for quite some time over here. The market had beat this previous level of resistance after the market broke above this massive resistance that it couldn't break through, because we can see the market formed this resistance in November and it was never able to break above that level up until we saw it in this week. And obviously we have a clear impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the low to the high of the impulse, and you can see we do have a 61.8 pullback that's lining up perfectly with that structure, which is also known as the golden ratio. However, it's important to keep in mind that although I see the market pull back, it's important that you apply the rules of the strategy that you use to make sure that the market momentum is ready to serve bearish before starting to look for a valid opportunity. Next up, we've got the NASDAQ. Now, the NASDAQ also hasn't done much since we last looked at this level. Now, we can see over here that the market had come back, massive weak rejection, and I am still bearish short term on the NASDAQ. Alternatively, if we do get a daily close above this level in next week, then I definitely expect the NASDAQ to continue higher. But for now, I do expect a short-term pullback as the market broke above this level of resistance, and all of that resistance is now turned support. From here, I would potentially start looking for a buying opportunity. Next up, we've got gold. Now gold over here, we can see now, if you look left, you can see gold is trading in bearish territory, and the market had struggled to break above this level back again. The market printed support, came back, tested it as resistance, couldn't break above that, came back once, twice, could still not break above that. It's once again very important to monitor the price action. What we have here is a potential inverted head and shoulders pattern, which is considered a bullish pattern from a technical perspective. If you look left over here, you can also see the market is also trading above above bullish structure. So the best way I would say to approach the situation, firstly, the safest zone is to wait for the market to break below this level of support, the resistance, and then trade that continuation to the downside. Alternatively, a clear break above this level would send the market slightly higher, although then that would mean that all fundamental data that came out last week for the dollar index would have been negative and not positive. And that is my bias. If you do have a different bias on the outlook for this week, you're more than happy to drop it down in the comment section below. It's all from my side. Thank you for your time, and as always, cheers for the years.